all right. We'll kill the music. Looks like you should have audio as well. Well, that's good. What good news? So, good morning. 9:06. Better late than never, maybe. All right, so what do you guys want to do today? Technical analysis, fundamental analysis. Are we risk on or are we risk off? What's going on in the world? Is everything right as rain? Well, we'll take a look at it. So we'll combine some technical analysis, fundamental analysis, and such. We'll also use our Traders Way platform, the greatest version of MT4 in the entire world. Now, you might have MT4, but if you don't have MT4 with Traders Way, then you're likely not using my custom tools I'll give you for free. Yeah. Free, baby, free. Free's good, right? Yeah. So anyways, good morning. Good to see you. Let's get on with it. Wait, yeah, over there's no live video. Yeah, there's live video here. So without further ado, good morning on a cold Georgia morning. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis, the overriding goal of planning our trades in advance. So try not to ask me things like, Wayne, what do you think about gold? Wayne, do you like gold? I don't like gold. It's mean. What do you mean like? What does like have to do with it, right? What's like got to do with it? So it's more like, what the better way to approach things is say, hey, Wayne, I'm a bull because of high inflation expectations. What do is gold still a good opportunity right now, technically? Oh, well, let's plan that day trade, right? In fact, that would be my follow-up question, right? I would say, well, is it a day trade? Is it a swing trade? Is it a spot? Like, how long do you want to be in this trade? You know what I'm talking about? How long do you want to be in the trade? So let's talk about it. Let me share different approaches and methodology for you to make informed investment decisions. Never ask a guru how to trade, what to trade. Put me in a trade, YouTube guru. Like, really? I wonder if Goldman Sachs ever logs into YouTube to figure out what to do for the day. I wonder.
U.S. dollar Swiss franc technicals. Follow through. Selling seen helped be talk of a new trade deal with the U.S. Gold steady as markets balance Fed rate cut hopes with easing U.S. shutdown risk.
A reminder about the last time SoftBank sold its NVIDIA stake.
United States Redbook Index, year over year, increased to 5.9% in November 7th from previous 5.7%. Bay Street may open higher again. Euro, Swiss franc slides to 2-week low as Swiss franc strengthens on U.S.-Switzerland trade optimism.
Another day with no U.S. government economic data.
Euro, U.S. dollar price forecast. Optimism and soft employment data weigh on the U.S. dollar.
Cool. So on the calendar, what do we got? Nothing. We have the ADP weekly. Not a lot of history. So yeah, weekly ADP now, huh? Yeah. And on a Tuesday, what do you guys think of weekly ADP versus monthly ADP? It's a negative number. That can't be good. Small and medium-sized businesses laying people off. That's what that means. Challenger, Christmas, and Gray show mass layoffs in the near future at over 100,000. Yeah. So what do you think? Probably pushing the Fed toward a December cut again. What do you think? Any thoughts? Do you like it? Hey, look, there's our video that we're doing right now. Oh, the color's off. Okay, current score based on what occurred yesterday, we're back positive again. We were negative, and then now we're positive again. So yesterday was a little bit of a risk-on day. 17 minutes ago, silver up, gold up. Look at that. Japanese 10-year yield up. German 10-year yield up. Nikkei up. Interesting, huh? What do you think? Sorry, I can't let go, right? What do you think? How do you feel? Do you like Japanese 10-year yields? You're like, dude, that's just what it is. It's funny that it's being reported as $1.70, but I'll fix that. Okay, biggest losers right now. USD Swiss franc way down. Well, that has to do with tariffs being reduced from 38% to 15%. It's not official yet, but that's what's in play. Okay, yields are down on the 10-year, reported as $4.12. What do you think? Is that probably $4, 4.12%? Yeah. So anyways, yields down is a good thing. Okay. Yeah. But down is down. So there's some flow here. The TLT is the 20-year, so it's been labeled here. Okay. Yeah, 20-year. And it's also a big mover. But now it's reporting it not as yield, but as price and ETF. So I got to clean all that. I don't really want TLT ETF. I want the 20-year yield. So anyway, so I'll have to clean that sucker up. Dollar's weak, especially against CAD and Swiss franc. Oil stabilized around $60, right? So maybe that's helping kitty cat. But yesterday's risk on. Okay, weakens dollar, weakens Dixie, weakens dollar. Okay, and remember, silver and gold are priced in dollar, so those go up as well. Cool. Look at that, silver holding over $50. Okay, so this page is designed to be a quick and dirty, just eyeballing. So based on yesterday, we had some risk on, and you can see the flows. Now this is over a week, updated in real time. So we're trying to show you kind of like the swing, not just the day trade, but the swing. And that's, with overall risk sentiment. So if we have another risk on day, then these are the things that have been moving, that are moving, that may be continuing moving. And it shows the direction and the percentage change. So that's how I organized it. I'm not satisfied with this page, though. And I don't think that needs to be there. So, I don't know. I'm not going to mess with it for a little bit. But let's say by the time we get to December, I'll probably have a different variation. I do like it's easy to get to the YouTube recordings or even to the YouTube live stream. Because if I click this, it'll actually take me into what we're doing right now. So you could be inside TRADARS and then fire up the video. Recordings or even to the YouTube live stream. Because if I click this, it'll actually take me into what we're doing right now. So you could be inside TRADARS and then fire up the video. Ha ha ha! Ha ha! Wait, if I watch a video of me watching a video of watching a video of watching a video of watching a video of watching a video, can I get 1,000,000 views? How about our risk radar, bro? Okay, notice that we're just going through our macro routine. You see the animation up here has been removed. What did Ada do? Oh, there it is. AI thinking. All right. So I reorganized this, made this vertical. I'm still not happy with it, but I don't know. It's something. Um, and yesterday we didn't have a very good score, and now we have an improved score. So since yesterday, the markets are a little greener. See, we need to double check everything, right? We need to double check everything that has been built. So make sure you don't turn your brain off. So one of the things I'm like, how did we were very risk off, but now we're very risk on. Okay, so now I'm like, what changed? What changed so much? So yesterday volatility was up, so that got a negative score. Okay, that makes sense. Over the last 7 days, basically flat. Okay, basically flat. Volatility way down over the month. And that's good. All right. But it still feels like it was significantly different from just even yesterday. So what I'm going to do is I'm going to challenge Aiden on this later today and say, I don't know, challenge, like how did this change so quickly? So I'll double check for us. Long story short, if we just eyeball this sucker, slightly risk on. Now, this is out of a score of 10, so you can see it's neutral. Okay. And let's see if the bottom is still locked. Okay, yeah. So I'll leave that locked. Cool. So you can see here at the top it says quantitative score and 30-day trend. So you can see what's happened over the last, it's not really trend, is it? It's history, 30-day history. Raw market data score. So if you just analyzed everything quantitatively, and we give you all the math, for example, 40% short term, 35% medium term, 25% longer term. So we emphasize the most recent. So think of this as an exponential moving average of risk. And then volatility is a big one, but silver prices are not the same weight as the volatility on the S&P 500, right? All right, so we give you all that kind of math, but we say here that's the raw market score before AI interpretation, and so that's what that bottom part is. I've taught Aiden the relationship between these moves in asset prices and what it means to future sentiment or sentiment of the future. Is the Fed going to cut in December? Well, we don't know, but right? So I can't prove it quantitatively here. Like this indicates the Fed will cut. No, that's an assumption. So how do you get to that level of reading this as tea leaves and say, wow, that means the Fed will probably cut in December or probably not cut in December? Well, that's much more subjective, and that's based on the relationship of these assets, not the quantitative total, right? So now we're talking about understanding how traders make assumptions about the near future, because that's what trading and investing is. It's not trading the past, it's trying to analyze the probability of the future. So anyway, so that what Aiden does is looks at the relationship of all these assets and then stuff that's not even on here, like shape of yield curve and flow and stock and a bunch of other things, right? Seasonality, but not just current seasonality, but current, near, and future seasonality, and how that would shape the near future, and that's all predictive, right? And then create a confidence score based on you know the strength or lack of strength of these relationships. Cool. So, anyways, that's what that's all about. It's kind of cool, but never, ever, ever turn your brain off, because you're 1,000 times smarter than artificial intelligence. So I'm going to challenge this. I'm like, I'm suspicious. And this is starting to populate. Good. So one of the things we needed to do is gather the price history of some of these assets that I couldn't pull directly. So I have to pull from the market, pull the data, store the data, analyze the data, and then run the Pearson correlation coefficients of that one particular asset that we didn't have price history for. Now we have to create our own price history and then run that correlation coefficient against basically all other known assets. and then give you an ever-changing and constantly updating correlation matrix. Isn't that cool? So we're not. So I think we need 30 days worth of data. What I don't know is Aiden actually grabbing these prices? And I won't know for 30 days, so I need to maybe, have a conversation with Aiden and say, hey, are you actually doing this? Because I can't see it, but I can't see the database. The funny thing about AI is it can't see this. It's really interesting being a developer of these AI tools because Aiden, our artificial intelligence who aids you, right? Aiden, he needs me to say, okay, what do you see? What do you see? Did it do it right? Did it show it? Oh, it didn't show it right? Oh, let me check why. Ooh, I see the problem. So Aiden can't see what I can see, but I can't see what Aiden sees. So I have to say, like, did you actually create the database and store tables for the Australian Stock Exchange? Oh, I forgot to do that. You're like, really? You forgot? So it's interesting, though, isn't it? Because all of a sudden, it truly is we're a team. AI can't do it without me, and I can't do it without AI. But wait till AI is working with AI to create AI. You're like, uh-oh. It's like trading derivatives against a derivative against a derivative of an underlying asset. So yeah, so we're not gathering this stuff, it looks like, or at least nothing seems to really have changed that much since yesterday. So I'll invest. Yeah, I suspect not pulling because, look, I should be able to have pound yen data going back 30 days, like hourly for 30 days, like at least. So yeah, I'm calling BS on this one, Aiden. You got this data. Just got to try harder. Cool. So, anyways, we're working on all of that. So, slightly risk on. Nothing till Thursday on the calendar of any reliable, repeatable pattern inside of volatility. So, scalpers, there's not a lot. There's no high volatility event driven strategies till Thursday. And even then, UK GDP. It is a good trade, though. Look at that. So these charts will show you 2 hours before and 2 hours after. Yeah. Now, I thought about creating a new version of this. I like the historic aspect of it. And I like the organization of it. But I was thinking, I used to have a tool. I guess you'd call it the first version of TRADARS was actually, I don't know, 15 years ago, called News Trader Pro. It was a Windows application that FX Bootcamp had. Now, one of the things I loved about that global macro analytical tool was we would store every every before and after. So like this, every 2 hours before and after every major news event. So CPI, PPI, GDP, NFP, that kind of thing. We would store all that data and it was organized in this long list. So you had every date, no, not too dissimilar to this, but imagine it was all US GDP. Then we look at the market 2 hours before the news and then 2 hours after the news. In fact, it was even less than that, meaning we had, I think, two hours before and after, but then I think we also had 1 hour before, 1 hour after, 15 minutes before, 15 minutes after. The point of it, though, is very often you'd see, let me draw it. Maybe in one news event, the market was flat before the news and then it popped. And then the next month it was flat before the news and popped. And then, popped. And then this one was up and then, right? And it actually went the other way. And so what we did is we did look at the greater than expected, equal, or this is greater, that's less than. Okay, we did look at that. We did organize it so that we would know if it was less than expected, what has happened in the past. So you can organize it and say, just show me all the GDPs that were missing. Okay. Or just show me all the GDPs or whatever, right? But the cool thing about that, which is the same information, but just displayed differently, right? So maybe I don't like this anymore. Maybe I'll build a different version. But one of the best things was that then we would calculate not only what direction did GDP move, let's say euro dollar. So now you have to do all the different assets on a miss, but what is the average expected range on a miss, or the average expected range on all of them? And that's just for that one asset. So now imagine it this way. And remember, you have to be able to imagine it before I can build it. So instead of saying, okay, this provides vol with some sort of pattern, and then you look at it and then we break it down this way. What if you clicked on it and it just showed you all the history of GDP organized by date, but on this part, before you even clicked in, like instead of saying, okay, there's 6 patterns here. Okay, this is good. There's 7. These are all even gooder. But what if it just said UK GDP 42 pips as the quantitative historic scalp opportunity? So less pattern and more implied volatility. I guess that's what it is, right? Implied volatility of the news event, not of the general market. So imagine now so now that I'm talking about this out loud, imagine this was all UK GDP over and over and over and over and over and over. And we have all the stats, where it moved, the range before the news, the range after the news. And so it said 2 things. It said it's likely to move 42 pips in an hour, and 33 of those pips are going to be in the first 15 minutes. And so we just create implied ranges. Remember, it doesn't know direction. But if it said, oh my God, we missed, it was lower than expected, and the page updated and said, well, based on all the other situations we've been tracking in which UK GDP missed, it adjusts automatically and says, no, it's not 42, it's 38. And the range changes because the news was a miss. Would you guys like a scalping tool like that was responsive to live data, but displaying implied volatility based on past performance of that similar situation? mean, am I going the right path? Is that, or do you want scalping tools or do you want more economic tools? Now, be careful how you answer because I'm already building a whole bunch of economic tools that I know you miss. I'm already doing that. So set that aside. Yeah. Anybody here like scalping news events if you had quantitative data? Like what if there was news today that said it's it's likely going to produce a 68 pip move in the next hour? Would that pique your interest? Is that right? Anybody else? Crickets? Okay. Oh no. Well, you just look at it's just a database. So how would it work? We have pricing data, and so you would say on UK GDP, okay, uh, store all the 5 minute candles 1 hour before to 1 hour after. So minus 1 hour plus 1 hour. Okay. So you have all these candles, right? And so now you have just data, but now you have to go through every UK GDP and say, what did it look like an hour before? What did it look like up to an hour after? But using 5 minute variables, right? Data points. So now you, right? And you do that for every event. So now you have this big aggregate based on date. And then you would run calculations on that. Now I can do all kinds. Again, what kind of calculations would you want to know? And again, we have to know that before it can be built. But do you want the implied volatility calculations? Do you want directional calculations? Did it so currently we say things like did it close higher than it started? Did it close lower than when we started 2 hours before? So going to the news radar, we're doing 2 hours before, 2 hours after. Why? That's just how the math is. And one of the questions is 2 hours after the news, did it close higher or did it close lower? Okay, great. So now you have an answer to that, higher or lower. But then we say, okay, now organize it by the news release. Was that a miss or um, or a beat? Because then you can say, well, okay, now organize the database by UK GDP misses, organize all of them, and then beats, organize all of them. Okay. And then run the calculations of does it usually go up in that situation? Does it usually go down? Or is there no correlation? So you're basically doing correlation. And if there's patterns, then we post it. If there's no pattern, we don't post it, right? So doing what we're talking about now, doing more like scalp opportunity, not direction, but opportunity size. Well, you have to gather the data, organize the data, analyze it, and then somehow display it in a meaningful way. So, oh, Yeah, I can do it. So if you can dream it, or if I can dream it, it's likely we can build it, huh? So this is a good time of day for scalping. The stock market has opened. Nothing going on the short term for these scalps. So these are really, I mean, there's no 4 hour and daily scalp. So these are more like swings, but it's showing potential change of direction is what I see here. For example, DAX has been down. There's no doubt. It's a falling wedge. That does not mean up. But if this is a breach, now we don't know, but if it's going to be a breach, if we go from we've been risk off for a week and a half, if suddenly we're risk on again, we don't know, and this doesn't say it, but if it does, a higher high could predict a higher low, which could be a turning point. So you either are ready to sell it like extremely soon, like we're at the resistance line. So if you're a bear, you should be getting ready to sell it. Well, I'd like to be a bull. So I'm looking at it differently, going, well, I can't buy it now, but if bears fail here, it'll make a higher high, and then I'll buy a dip. But bears, get ready to sell. Bulls, way too early. Now, then you go from Germany to the United States, and you're like, okay, well, we've had a little more risk on before. It's not really bullish, but what's this move? Well, back to a double top, back to resistance. Will we go higher? We don't know. Will it make a higher high? We don't know. That's not what this is. But a high probability, because we've broken the short term down, that we set back to the top, which is going to be resistance, right? High probability of that. Let's see if I can zoom in a little bit. Okay. So here to here, and you see we even gapped up. So on our way to 69, maybe. Beyond, maybe. Well, once again, beyond would be a fundamental. Okay, looking at the DAX from a different point of view, okay, here's the falling wedge, but we're range bound, right? So how would you trade the range? And that's where you're like, well, you go from the bottom of the range to the top of the range, and then, well, you don't know. Okay, this move here is non-directional. Okay, this pattern doesn't say higher high, does it? For example, let's play around with this. I know we don't see the whole chart, but that doesn't say higher high. Now, if the data looks like this, now that says a higher high, but we don't have that. So all we know is this to this is a range, and this is why the confidence level is pretty high that we'll go here, and then confidence level wanes. Same thing looking at this. We're just back to the top of the range. Well, isn't that how you trade a range pattern? Okay, isn't that how you trade a range pattern? High probability we go up to here, and then what? High probability we don't know what's going to happen next, right? And then looking at the Australian stock market on a daily, lower low, lower high, lower low is possible, but I think we're really, it depends on how bullish you are. If you're a bear, that's going to be awesome. But if you're a bull, you're like, there's still hope for me. There's still hope. Unfortunately, that then sets up a head and shoulders. Right? So bulls, if you're hanging on to hope, here's the problem I have with this. a trend. So let's extend this primary support line. Let me change the color. Okay, the primary support line is this, which means if this is bullish, we're going to follow some form of rules of, of engagement, right? Higher high, higher low, higher high, higher low, right? Higher high. And I'm assuming this is really a wedge, so it's tightening every time, right? Okay, so that's the assumption. So we're not supposed to be here. So that's what I'm looking at, this drop down here. It's not the fact that it's a lower low out of the wedge. I mean, I care about it, but I don't care about it. What I do care about is there's 100% retracement from this low to that high. And that's the part I care about. You're like, well, that doesn't belong in an uptrend. 100% pullback doesn't exist in an uptrend. So what it does, it sets something up that's much different from that bullish point of view. So bulls, you're supposed to take note. And now it looks more like that, 100% retracement. That should kill all the bulls, especially if you're bearish. So if you're a bear, you need to notice that. If you're a bull, you should also notice that. So what's the next situation? Okay, it's a different pattern that doesn't really exist here, but we can go check it out. The pattern is this. Let me change colors here. The pattern is look for this top to act as resistance in the future. Okay. Now that's actually what this pattern suggests. I've already drawn it, but again, if you don't understand how to read sheet music, it's not like I can just give you a book of, Beethoven songs and say, well, there you go. And you're like, what is this? Oh, it's beautiful music. Like it's just squiggly lines on a piece of paper. No, it's notes for the pianoforte harpsichord. The what? The pianoforte harpsichord. Oh, a piano. Yeah. The loud, soft harpsichord. So anyway, so this is showing sort of breaks and probabilities of these breaks and if and then. But it's much different than sort of our patterns, right? So back to resistance. Okay, back to resistance. Now, is that a trend trade? No, there's no trend there in my opinion. So I don't love that. But we could zip over, for example, to our technicals. And this is where you filter based on your opinion. So let's create an opinion. Okay, I'm an opinionated person. I have opinions. Let's buy the Swiss franc. Okay. Cool. All right, TRADARS. Show me all reliable, repeatable, generally accepted patterns. This is not like Wayne's favorite tool or Wayne's favorite trade setups. No. Generally accepted technical analysis. Remember, TRADARS is not a decision maker for you. TRADARS acts as a junior trader, in this case, a technical analyst that works for you. And you're the boss. And so you're like, hey, chart bitch, get over here. Analyze the Swiss franc across the board. Give me patterns that you recognize. Yeah. And your chart bitch knows things like what a head and shoulders is, what a Gartley is, what an up channel is, what a down channel is. Okay. And doesn't make mistakes. All right. But you're the one that says, should you buy the Swiss franc or not? Okay. Great. So let's see. Opportunity. Yep. Strength with an opportunity. That's good. Put that on your to-do list. Okay. Euro Swiss franc breakout. So if it makes a lower low on the 4-hour, sell a lower high. That's definitely a maybe. And you probably want to look for other patterns on smaller time frames, or at least kick it off the moving average. Put it on the to-do list. Done. Aussie Swiss franc on the 4-hour, bearish with an opportunity. Put that on the to-do list. By the way, look at this. A day ago, you got this heads up. Am I reading that? No, sorry. 7 hours ago. My bad. Okay. Swiss franc, 15 hours ago. Bullish with an opportunity. That's good to go. USD Swiss franc. We want to buy the Swiss franc. That's great. This is an up with a leg down, so I'll pass on that one. Aussie Swiss franc daily, that is expected to kick off support and go up. But you know what? This pattern suggests consolidation, no opportunity. Pass on that on the daily. So stay smaller time frame. And if it does drop, then we will break this channel and or this triangle, I should say, and it would go from neutrality into a downtrend in which you then would sell rallies. So is that happening? No. Will it happen? Yeah. And if you're right on your probability, then yeah, probability that'll turn bearish. But guess what? If you can't confirm it, you shouldn't trade it. Okay, I want to buy Swiss franc. Kiwi Swissy is bearish with an opportunity. Definitely put that on the list. You should be crushing it. Kick it off that moving average, son. Kiwi Swissy daily. What does this say? Yeah, should be able to go to the bottom of the channel and then head up, and then the D is going to be in the next one around. So anyways, that's every Swiss pair just like that. And of course, that takes way longer for me to explain it. Also remember, it tells you the time frame and the reason. So now you can isolate these things. So like Swiss franc yen. Oh, okay. Well, maybe we should be into that. So what do? Pull it up. And now you do your technical analysis. Okay. Like, can you see this weekly chart? Can you see the plans that we already have? Right? Holy smokes, Batman. What an amazing technical analyst I am. Yeah. The thing is, Swiss franc weakens for a month and everybody thinks the world has changed. Now, maybe the world has changed. Maybe there are double bottoms. I can't say these things don't happen. And also, we know the Swiss National Bank would actually prefer a weak Swiss franc. But nonetheless, this is what's been happening for years. And that's how we have it set up. Now, we had this break, which happened. And then, all right, the next pullback. And now, is that what's going on? Yeah. So maybe the Swiss franc move actually has nothing to do with Trump reducing their tariff from 38% to 15%. Maybe this is just what should be happening. Well, that's for you to analyze, right? Yeah. Oops. Okay. Now, I typically don't have Swissy yen up ever because I'm a macro trend trader and that's not a macro trend. And so I don't even have it up. So let's look at something else. Euro Swiss franc, maybe later today or tomorrow, bearish. Okay. So let's pop this. Okay. That's what we want to look for. So Euro, Swissy, we don't want to be on a weekly. That's too esoteric. But, you know, it is something that we looked at. I guess I should cover this. Because, look, Euro Swissy has been falling for years and 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 years. But look at this amazing bottom that we're on right now. So if you thought, as an example, the Swiss National Bank would intervene with this strength that we currently have, then this is the price. We just don't know when. So you could be on intervention watch. That's what this talk is, right? This chart is all about intervention watch. Is it going to happen? How would I know if the Swiss bank's going to surprise us with an intervention? How the heck would I know? Then it wouldn't be a surprise. But are you ready for it? Are you planning for it? Are you going to trade it? Okay. Right? And you're like, well, Wayne, it looks like we've had a whole entire month. Okay. So then how do you put this together? Well, look, if you don't believe the intervention is going to happen, if you believe the downtrend that's been lasting, let's say, since COVID, let's say for the last 5 years, this has been going down. And you're like, Wayne, I kind of have to go with that. Good. All right. Well, this is your sell zone. What's the problem? Somewhere between the 21.55. And this is what you think. But are you thinking this way? And are you trading this way? That I don't know. Now, you might be on the equal but opposite side of this thought process because nobody knows the future. And you're like, you know what I do know, Wayne? That was a bottom and a pop. And this was a bottom and a pop. And this was a bottom and it popped. Okay? You might include this. You might include that. And now we're here. You're like, Wayne, that looks like a bottom. And it's been up for an entire month. So, Wayne, I think we're going to eventually turn this bus around. Go this way. And I'm like, okay, well, I think your pricing is probably pretty decent. But I think you're very early in the game, huh? So now you have to decide which way. And that's why, you know, this might set up as a triangle for you because we won't know. But the thing is, what if you never even notice that Euro Swiss franc is essentially at an all-time low? What if it breaks down, dude? Dude! What if? All right, so let's take a look at that. Then this might be very important to you. So down to 92.50 from a test of basically 93, just a little above 93. All right, so let's get into that. Let's go into an hourly. Where's our 93.20 area? Right. So it's basically actually. So I'm literally looking at the pattern, and it spiked above 93.20 a few times. So this is where we are right. All right. So let me just mark it. That's really what I'm trying to do. This top is what we're looking at here how important is this? So all we see is this right now. So we're hyper zoomed in, right? And the next thing is, how do we feel about this being breached? How do we feel about having price here? And how will we feel about it if this drops to 90 to 50? And by the way, notice my chart, we're at 92.75, and look at this. It's nearly real time. Oh my God, it's nearly real time. Yeah, okay, great. All right, so this is where we are. Let's zoom out and get a bigger picture on direction. See, now I'm actually doing technical analysis. This is just a pattern. It recognized that we had an up channel that is breached. And it told you in real time. Remember, it's just your chart, bitch. Show me everything you know. Okay, great. But you still have to make the decision. Are you the boss? So you have to be able to see that we're at maybe an all-time support. Maybe you think that's important. Or maybe you're just simply a bear and you notice that we top. We've spent over a week at a 50% retracement and at the monthly M3, which predicts what? M1 minimum, which is here, which is technically a lower low, but 50% usually gets me to the middle. So then I say, well, there's a decent probability, high probability of here, decent probability of there, which is a 138.2, and an S2, which is great. And that's your whole trade plan. Done. So now you're looking at this. Remember, it's not telling you what to do. It's saying, hey, this is happening. Hey, boss, this is happening. Do you think it's important? And you're like, yeah, I'm watching. In fact, I think we're going to make an all-time breach here and maybe end the year down at 90. Okay? Or even a little bit lower. So if it's a rinse and repeat range-wise, then you can say, if it does this, okay, then something similar actually gets you, is it 88? 88. Wow, and we were talking about a pianoforte harpsichord with 88 keys on it? Dude. Cool. So that puts everything into perspective, doesn't it? That this move is creating this amazing bearish engulfing candle. So, are you doing this type of analysis every day? Is that how you're using your tools? I hope so. Okay? I want you to be able to do that type of critical analysis. If you're looking for tools to tell you what to do, that's your failure. Thinking about it. If in this relationship between you and TRADARS, there's a boss, which is you, and TRADARS assistant, part of your team. You have a fundamental analyst and essentially a technical analyst, right? So you have two people on your team, minimum. And then you have coaching staff and all that kind of stuff. So you have me on your team. Right? But you have to be the boss. If you're looking for someone to make the decisions for you, you're not even the junior trader. You're not even an analyst. You're not even entry level. So you got real people on your team, which is, real intelligence. You have AI, which is artificial intelligence. And if you're neither of those, then you're just dumb. Maybe not as a person, maybe as a human being, you're smart and cheerful, and people look up to you, especially children. But your trading strategy is meager at best because you're not even doing the basics, yet alone making, being in boss mode, making decisions. You're like, I don't even know how to do analysis, so I'm just going to give up. Whoa, whoa, whoa. So, hey, YouTube guru, just tell me what to do so I can get rich. Yeah. Did you like that process, or did you not like that process that I just did? We actually had quite a few people drop out. Was I too slow? Or are those people actually just looking for signals? Yeah, maybe it's just signal hunters, huh? Yeah, yeah. Yeah, the funny thing about that is I can say, well, okay, I'll just give you signals. I'll just tell you what to do. It's $1,000 a month. And they're like, I don't have any that kind of money. Oh, well, then what do you need a signal for? Or the flip side is I could probably tell you what to do, but since you didn't make any of the decisions, you're not going to have very much confidence. And you might try it 2 or 3 times, not execute it very well, fail, and give up and say Wayne is just stupid, right? Or I tell you exactly what to do, but you still can't do it. You're like, why don't you just sell the rallies in a downtrend? Why don't you just buy a dip in the uptrend? You're like, well, I can't do that. Well, I mean, that's what you're supposed to be doing. So at the end of the day, it doesn't matter, is what I'm trying to point out. What I think is irrelevant, you having capabilities that bring you confidence enough to actually execute your analysis. That confidence level based on ego, not egotism, but you know the truth because you have knowledge, then you will actually be able to carry out what you think is right. And that's where you will find success. So even if you found the world's greatest signal service that charges you $50 a month, I don't know why they could be making billions trading themselves, or making millions providing signals to hedge funds that actually have a lot of money. But for some reason they're selling it to you for $50, and they have the secret sauce to make everybody rich beyond belief, and they charge $50. Okay. But even if it was great, the reason these services fail is the people that subscribe, even if they had the right answers, don't have the confidence and the skills to actually carry it out properly. So then what's the point? Well, I might as well just teach you how to be a decision maker. I'll just teach you how to be a boss. And then you'll have to choose. If you become the world's greatest trader, you can trade your own account and become a multi-billionaire. You could do consulting work with hedge funds that have billions under management, and they'll pay you millions, and right? So you could be a millionaire doing that, or you can sell YouTubers a $50 a month product. And you're like, but who would do that? It just doesn't even make sense, right? So anyways, whatever. So I hope you appreciate the step by step by step by step process that we just went through. If you're on my team, we have a meeting at noon. Okay. So if you're a member of TRADARS, we have a nooner. Cool, right? Hooah! Hoorah! Ripple price forecast. XRP recovery cools despite increasing derivatives volume, open interest. US dollar Canadian dollar extends losses as weak US labor data boosts Fed cut expectations. Tech sector cools as energy gains momentum. Nvidia leads declines. Forex technical analysis. A look at the US dollar Canadian dollar, Australian dollar US dollar, and Kiwi dollar US dollar. What levels are in play?
Brazil inflation eases to 4.68%. Euro yen rises as euro gains on resilience. Yen pressured by dovish BOJ stance. US dollar Swiss franc technicals follow through. Selling seen helped be talk of a new trade deal with the US. Gold steady as markets balance Fed rate cut hopes with